Hey everyone, this is Mike Wise with the Boston Blockchain Association in Boston. Really excited for this panel. It's December 2nd, actually, before Christmas. I know we're recording this for January 22nd and the future of money governance and the law. Really excited for that upcoming session hosted by the Government Blockchain Association. So we're going to be talking today about CBDC, central bank digital currency, and stable coins. We have a distinguished panel here today. We have Jim Cunha in Boston. He's the executive vice president of the Boston Fed and a great champion of digital currency, I might add. We have Suleiman Barada in Beirut, and he is the head of UAB Digital and which is part of the Union of Arab Banks. And we have Mark Montoya in DC, the chief data officer of the Government Blockchain Association and a senior analyst with a US financial regulator. So let's just go around the horn real quick. And Jim, could you just introduce yourself very short, briefly, and what are you working on right now at the Boston Fed?
Sure, thanks, Mike. Pleasure to be here, and I'll give the normal Fed disclosure. These are my words, not necessarily those of the Fed. I'm a longtime Fed person, 37 years, always in payments, technology, and innovation. What we're doing with MIT, specifically the DCI, the Digital Currency Initiative, is technology research. So we're jointly building a theoretical retail CBDC, and we're about to publish the results of that research in an open source license for the code.
Cool. Thank you. I'm so excited about that. A lot of people are asking that. I wear this MIT pullover on a regular basis at events, and people always ask me, "Hey, are you with MIT?" Hey, I went to MIT. There's a lot of MIT people in the blockchain community, that's for sure. Suleiman, could you introduce yourself and what are you working on?
Absolutely, mate. Thank you very much, Mike, for having me, and thank you, GBA, for bringing this panel together. Very pleased to be here. Well, as you've introduced, Mike, I spearhead the ecosystem digital transformation arm of the Union of Arab Banks, pretty much which was established a year and a half ago, with the mandate to leave no financial institution behind as the sector transitions into the digital economy. And our days and nights are, pretty much occupied moving and progressing the agenda of CBDC, open finance, and a model digital bank for the Arab region. We're working on all fronts to ensure that progress is being made in full collaboration with regulators, commercial and investment banks, and all the other actors within the ecosystem.
Okay. And okay, so CBDC capacity, you're building that, you're working on the open fin standards and a model for digital banks for the ecosystem. Awesome. Mark Montoya, could you tell us a little bit about yourself and what you're working on?
Yes, sure. And this is an exciting time. Great panel also. But for the GBA, I'm also working on a lot of data initiatives, data strategy. With the US regulator, we're doing a lot of research on fintech, on regtech and suptech, seeing how blockchain technology can help the agencies, but also the banking industry, also ensuring that their safety and soundness behind that. A lot of stuff is on blockchain and cryptocurrency type technology, but also there's a lot of research being done on cybersecurity and how blockchain can actually help cybersecurity.
Mm-hmm. Amen to that. Yeah, one of the things that we talk about at the Boston Blockchain Association on a fairly regular basis is PQR, post-quantum resilience. If you don't know about that, I highly recommend you take a look at it. So great, fintech, redtech, suptech. There's so much technology happening. All right, well, this session is intended to be primarily educational. So we want to kind of go through some of the essential elements for the listening audience of CBDC and stablecoins. So the first thing we'd like to cover is what is the role of the central bank and why are they important? So we've got Jim and Suleiman both associated with central bank. So Jim, what's the role of the central bank and why is it important?
Yeah, so our primary mission is monetary policy. Like most central banks, that's pretty core to all central banks. We also supervise banks, which is sometimes within the central bank, sometimes not. We've got a role with other federal agencies in thinking about financial stability. You know, what could go wrong on a macro basis that could affect the economy. And unlike other central banks, we actually build and run payment systems, both wholesale and retail. And lastly, we're a fiscal agent to the Treasury. What that means is we get to help control the money supply, the currency, and distribute that currency through banks to the public. So those are our major roles. And obviously, they're critical to the economy itself, how it runs, how it stays stable. And then we're also obviously the reserve currency of the world, which obviously comes with international implications.
Yep, that is definitely a distinctive. Suleiman, how would you answer that question? What's the role of the central bank?
Definitely, I would certainly second Jim's way of answering that question, but probably put in a contextual manner. Global central banks, around the globe, they may have different structures, and central banking and supervision of monetary systems might differ from one country to another, from one jurisdiction to another, depending on the local regulatory authorities that have been established to extend that oversight with different scopes. Within our region, and I think globally, really the common denominator of the roles of central banks is stabilizing the monetary system through sound monetary policies, protecting the value of the local currency, and also extending the necessary protection to the depositors, while ensuring combating illicit finance is happening all the way through each and every activity.
Yep, that's a really good additional point. Money laundering and fraud and all of that, right?
Absolutely.
Okay, great. So good answers there. Thank you for that. How are current trends and advances in technology impacting or changing the role of central banks? So Suleiman, let's go with you first on that. How is technology changing the role of the central banks? Suleiman, you're on mute.
Sorry, I'm back. I lost you for a few seconds, Mike, due to the connection.
Okay, let me repeat the question. How is the advances in technology changing the role of central banks?
Right. So the technological advancements that have been accelerating over the last decade really gave birth to what we all refer to today as the digital economy, right? That's the broader dynamics, and that's how we try and refer to it. And the term digital economy really implies that the constituents within these various economies and around the world are actually, and within a monetary system, are becoming largely dependent on digital means of payment, digital storing of money, digital ways of spending and earning additional money. And then, so that is the changing behavior of the constituents that together is referred to as the digital economy at large. This shift in the market from high concentration of cash to high concentration of digital transactions is turning a little bit irrelevant, or in the best case scenario, outdated some of the monetary policies of the central banks around the world, Mike. And the impact of digital is therefore calling for a new set of monetary policies that can accommodate this snowball and network effect of the digital economy. And it's not a simple task at all. If we want to put ourselves in the shoes of central bankers, it's not a simple task. And in a citizen-centric world, central banks should ensure that the newly formed monetary policies are not only apt for the short term, but they also would remain apt for the longer term, and that depositors' money and interest remain intact and and maintained and protected all the way through, and it does not get diluted at any stage throughout this development phase.
Okay, so I want to come back to what you said about the new set of policies, and it's not a simple task to get there, right? I want to come back to that. Great comments. Outdated monetary policies, we've got to sort of re-engineer, which is a great segue to Jim. How would you say, Jim, new technologies are changing the role of central banks? And if you could do me a huge favor, please make reference to your famous line about the cow paths.
Yeah, so you've been to Boston. Our roads are pretty crazy. And there's a saying in Boston, don't pave the cow paths, but you get Boston roads. So I guess I'll weave that in a bit later, but I guess to complement the last set of comments, I think it doesn't change our role, it changes how we do our job. So for instance, if we're examining banks, those banks may have new risks and new opportunities because of technology. We have to understand that to make sure that the safety and soundness of those institutions remain sound, which is our job. How we do our payment businesses, we can be more efficient, more effective, and also reach new constituents through new technologies. And monetary policy may have to change in some cases as the instruments change, or maybe it's just a matter of reinterpreting existing policies to take care of that shift in technologies. But also, basically not just the newest technologies, but technologies over the decades have been flattening the world. So movement of money internationally, the reserve currency of the US, they're all affected by the fact that now the world is flat, using a very old term, I guess, and the technology has interconnected us in new ways. Just think about what the internet did to moving data. There isn't a financial institution in the world that isn't connected through the internet, whereas when it first came out, they wouldn't touch it. So I think this evolution is always ongoing. It's just really accelerated now. But I'd say it's more about changing how we do our jobs than what our job is, per se.
Yeah,
I say paving the cow paths.
Yeah, that's a really good, yeah. So in other words, the point about paving the cow paths is that, as Suleiman was saying, we have a whole set of policies and standards and workflows, et cetera, associated with the previous iteration of financial technologies and central bank functions and so forth. We don't, as we shift to digital currencies and blockchain-based technologies, or blockchain-informed based technologies, we don't want to just take the old process and make it blockchain enabled. In fact, you can't do that. That's really the point. And I hope that the listeners to this that are in, places of policy-making decisions will really take that to heart. And one of the things you said, Jim, was the policymakers have to understand this, right? And that takes effort. You've got to really, take some courses or take some classes or go to some workshops or do something, and make sure you're not operating on the level of cliches and buzzwords and things like that, right? You got to know.
Or you build things, as we're doing, which I think is the best way of learning, is build it. And you'll learn things that you didn't know existed relative to the implications.
That's right. And you have formed a great team to do that which you've recruited people that have as much as possible blockchain digital currency experience, right? To join your team to lead that build.
Yeah, we started our experiments with MIT to build this theoretical model for CBDC. We wanted to basically hire people from the outside so they think differently. So most of my team comes from Circle International that created USDC, or they're recent MIT grads or other people that are in the startup world or in the crypto world, because we wanted to think differently about how we do this. Otherwise, we may just pave the cow paths once again.
Right. Okay, great. I see a question on thoughts on the upcoming HFSC 12.8 hearing, digital assets in the future of finance, understanding the challenges and benefits of financial innovation in the United States. We'll come back to that in a second. And anybody else that has questions, please put them in the question pane. So next question, what are some of the various public positions around CBDC announced by central banks? Suleiman, let's start with you.
Sure.
So go ahead.
Yeah, we've been having a lot of conversations, Mike, and I just was very, very privileged to be invited into a lot of conversations that are happening all the way from the extreme west to extreme east, and we throughout these conversations, like, you know, my personal observation is that there isn't anyone against CBDC or taking a posture that says no, this is not something that we would want to pursue, right? So the spectrum is is on the extreme left. You've got people saying so there is acceptance, but and immediate pursuit. We want to start it now, and we want to be a pioneer. We want to enable our digital economy, and we want to be, to allow for growth and prosperity to happen through all the possible digital means. And CBDC is seen as one good digital mean that may accelerate and add agility to the monetary system. So that's on the extreme left of the spectrum. On the extreme right is also acceptance, but a deferral of adoption, right? And that deferral may be due to various reasons, which we are trying to address through capacity building activities, or that slowness in adoption may also be attributed to the fact that the central bank is still deciding on the design choices, trying to establish the necessary business case, national business case of a CBDC, so that it delivers the intended outcomes. So that's what I see from a spectrum point of view, Mike.
Okay, great. Jim, thanks, Suleiman. That's really good. There's two, what you said, there's two. There's the left-hand side where they say, yes, let's go, let's do this now. There's benefits to be gained from it right now. On the other side, there's people that say, yes, let's do it, but let's go a little slower, let's build capacity, and let's be a little bit more methodical about this. Jim, how would you answer that question? What are some of the various public positions around CBDC?
I think that sums it up. I think there's two ends of the spectrum, people who are already in production, via China, the Bahamas, Eastern Caribbean, Nigeria most recently, or others that, and most are in this camp. I'd say 98% are in the camp of saying, we're studying it, we have to find the business case and maybe even change some laws, but we're studying it seriously. And I think that's most of the cases out there today, especially on the retail side. And also, I'd just say there's a couple of papers by the Bank for International Settlement. There were 7 central banks that got together to put some position papers together. It was mostly about what are the issues, what are some of the guiding principles. So I point people to the BIS website, specifically the work on the ad hoc group of 7 central banks that talks about some of these issues. What matters, what's important. For instance, one of them says, do no harm. If we're going to issue a CBDC, let's not destroy or really hurt the current systems that are out there. So that's a good way of thinking about it as well. Those are pretty well received statements, or commonly used statements.
Yeah, I've heard that a lot as well. So we'll share that link in a follow-up email, the ad hoc group of 7 central banks and do no harm and their papers. Jim, I know you're also really focused longer term and more broadly on the idea of financial inclusion and the impact that this can have on that. Can you just, while we're on this topic, can you just talk a little bit about that?
Sure. So I've been beating my head and failing miserably in trying to look at financial inclusion and how can payment systems help in that area. I thought the phone was the answer, and it's helped a bit, but it's not, the mobile phone, obviously. But I think if a CBDC was designed well with a public good specifically stated of financial inclusion, and if you do that, you may build it differently such that, for instance, it may be cheaper or faster, if your goal is financial inclusion. I can think of innovation, and this is always going to be a public-private partnership. I can see innovation by the private sector, creating ways that those that are financially excluded, unbanked or underbanked, can have better access into financial products at a very reasonable price, if not free. So take an example, a single mother of two may get a paycheck, and it still happens. She goes to a check casher, pays a fee, she gets some remittances sent home to her home country, costs a lot of money, buys money orders because her landlord won't take cash or a check. And so, basically all that could be done with CBDC, with innovation by the private sector. So I think there's great opportunity, but I do think it has to be a public good, the currency itself, meaning free or relatively free, and it has to be a stated public policy goal of financial inclusion. Like I said, if you do that, you may build it differently to help support this particular area.
Yep. Because if you don't have it as a goal, it's hard to track your results to the goal, right?
Yeah, absolutely.
So we've got to get it out there, so to speak. Okay. So yeah, go ahead, Suleiman.
Second, Jim's comment. There's a global cause on inclusion that has now become more supported than ever. And I think the business case for inclusion within CBDC is quite evident. It's just a matter of bringing it into the design phase while making design choices by the central bank so that the outcome of the CBDC deployment does deliver on that promise. So the advice that we're extending here to central banks within our region is that inclusion has to happen by design and at design stage, and that central banks must make design choices that are inclusive in their in their designs and therefore in their deployment afterwards. There's another socioeconomic motivation that we see in this part of the world, which is the cross-border the interoperability of payments, and bringing the burden of moving money from one jurisdiction to another to an absolute minimal level. That too has been burdening a lot of the people working abroad and sending money back home. So that too is a cause that is worth considering while designing a CBDC, and that is being addressed within initiatives that are of a cross-border nature in MCDVC conversations. We see a few examples of that already, and that are very promising.
Yeah, and Mike, going off what Solomon and Jim was talking about was there used to be characteristics behind the CBDC. It's universally accessible, like you said, from an inclusion standpoint. Is it interest bearing? Can it be exchanged? Is it tied to actual real world accounts? Can you withdraw from it? There's a lot of different characteristics on these central banks doing projects to look into that. And just from a global standpoint, it should be universal across all the central banks in order for it to interact, interoperability between the networks. There's a lot of big things, a lot of big decisions that need to be made by the central banks, but they can drive that. They can drive that change in design.
So you said it's got to be universal, interest bearing, a method of exchange, connected to real world assets. What was the fifth one that you said?
It could be withdrawn. You have to be able to withdraw it, right?
Okay. From
your accounts.
Right. Okay.
Whether it go into fiat, and we get into the whole stablecoin discussion, but yeah.
Okay. Yeah. So great segue, Mark. We're coming up on half time, so let's move over. We lost Jim. Sure, he'll be back. Mm-hmm. Mark, what are stablecoins?
Great. So what are stablecoins? So stablecoins are a type of cryptocurrency that is pegged to fiat money, traditional money, other cryptocurrencies, or exchange traded commodities. That's the bottom line. That's the definition of a stablecoin.
Okay, roll through that one more time.
Yeah. So what a stablecoin is? So it's a type of cryptocurrency or digital currency, right? That are pegged to one to fiat money. It's also can be pegged to other cryptocurrency, or it could be pegged to an exchange, traded commodity from an exchange. Just from a basic exchange, that exchange traded commodity.
What's an example of an exchange traded commodity?
So I guess you can say, I'll just give an example from a cryptocurrency standpoint. There's DAI's an example. And then some other ones, geez, any type of commodity. I just can't come up with one right now.
Okay, well, come back to that. So
Yeah.
it's a cryptocurrency. It's backed by fiat or some other crypto.
Other type of crypto or commodity. Yeah.
Right, that's got value and or an exchange traded commodity. Okay, so what involvement do central banks have in the issuance or the governance of stablecoins?
So this is an interesting part. It could be, again, going back to the basics behind central bank digital currency, but they need to figure out the uncertainties behind it, right? Before it goes live. So they need to understand that it is pegged one for these other items, right? The currency, the fiat currency, fiat money, and the commodities. But what are some of the uncertainties from it as they start managing it, right? The legal uncertainties behind the stable coins and how it's pegged one for one. There's also the idea of making sure how they can actually have the legacy environments interact with the cryptocurrency environments, right? How can you roll out this type of technology? What are the risks in rolling out all this type of technology? And then also you have to look at how, again, from an uncertainty standpoint, if there's any risk from implementing this in the current legacy environment and how it's going to affect monetary transmissions. There's a lot of different things that the central banks can look at from a stablecoin standpoint. Yeah.
Okay, Jim, how would you answer that question? What's the involvement of central banks in the issuance or governance of stablecoins?
Yeah, it really depends on the authorities of the particular central bank. So, for instance, in the States, we regulate banks. So, if a bank was trying to hold stablecoin and became part of a stablecoin network, we could regulate it relative to their safety and soundness. We wouldn't regulate the stablecoin. We would regulate the bank's activities within that stablecoin structure. If they became systemically important, if there's enough money being put into these stablecoins, our role on the Financial Stability Advisory Council, Oversight Council, may say we have to regulate it because it's systemically important. So those are the two main areas. Right now, we don't have authority. I'm not a lawyer, but I don't think we have authority further than that to actually regulate the stable coins themselves. That would fall, I believe, probably to the SEC or depending on what it's called, maybe the FTC, depending on how it's structured as an instrument. But right now, and obviously, Treasury has responsibility for anti-money laundering and counter-terrorist financing. So if it was used there, they would come into play. But the Fed itself is not, directly related to by its regulation, regulating the core stablecoin itself.
Okay, Suleiman, what would you say?
Sure. So the question is twofold, Mike. The issuance and the governance. On the issuance side of things, I don't think that central banks would actually be involved in the issuance per se, but in ensuring that issuers are properly licensed against the right criteria to minimize the inherent risks, right? And that's taken in a holistic manner. So that would be the role in the issuing part of stablecoins. And that's still a learning curve, right? As to what regulatory measures have to be established to ensure that those issuers are properly selected and screened for operation. On the governance side of things, yeah, I do think that definitely the central bank's role would be, if stablecoins manage to go mainstream, would be to be involved in the governance and the quasi-regulation or the quasi-regulatory activities of the stablecoin, primarily in the areas related to ensuring protection of holders and combating illicit finance again, but because there's a great deal of illicit finance that could happen if it's left without proper supervision, and more importantly, to address the prudential concerns that are also arising from that, Mike.
Did you say credential concerns?
Prudential.
I'm sorry?
Prudential.
Oh, prudential. And what do you mean by that?
Well, be it the microprudential or the macroprudential, and how the whole monetary and economic and economic system is evolving over time and may move the concentration of economic power from one party to another party in an illegitimate way. So, though, the monetary movements that may result against the public good, if I want to put it in a brief way, and Jim can correct me if I'm wrong.
Jim, what do you think? Any comment?
Yeah, no, I totally agree, and I'm not a regulator, so I don't want to go too far out on a limb, talking about regulation.
Okay, all right.
We have, like I said, we have different hats and different ways of thinking about it, but we are not the regulator of the stablecoin as our current mission exists, as far as I know.
Right, right. Jim, one of the things, at the Boston Blockchain Association, we do biweekly, sort of bi-monthly meetups on different topics to inform and educate the blockchain community around the world. And one of the ones we did about a year ago was on CBDCs. And one of the comments you made, Jim, on that was the whole idea of regulatory nodes on the chain. And I thought that was really good. Can you just say a couple sentences about that?
Okay, so this would be if there's a private exchange or a private blockchain that's let's take Finality. Finality is a wholesale token network that is being built by, I think it's 15 of the largest banks in the world. So they'll have this whole, basically the stable coin, and they'll move the stable coin amongst themselves relative to when they're buying and selling securities. They need money on the chain, so that token is the money on the chain. And so, if I was a supervisor of that scheme, I think it would be good to actually have a node on their network so that I could see the flow of money. I could see the flow of, is a particular bank, on the street. They usually know when someone's in trouble before it's obvious to most other people. So if you were on the blockchain, might you see something developing through AI and other analysis that gives you a sense of what may be happening to a particular financial institution or to the scheme itself. So it's really an advanced view, a real-time view of what's happening within that scheme. And I just called that loosely a regulatory node.
Yeah, it's a really good idea. I love the idea. I've been telling a lot of people about it because it allows for compliance monitoring on an exception basis, right? So if things are just running normally, great. To Suleiman's point about AML and money laundering and so forth, it's nice if we could just have a scan of transactions and kick out the ones that are potentially out of compliance. All right, so back to Mark. Mark, and we just have 9 minutes left. How might stablecoins impact national economic systems?
So I see the interaction between the central bank digital currency and the stable coins and the coin networks working together. Again, that's my view. If you look at stable coins now, I think it has a market cap as of October 2021 has a market cap of 100 billion, which is kind of small in the grand scheme of things. But the USDC Tether and the US coin, digital coin, has 3 to 5 trillion processed daily. So that's a lot of money to look at. So the impact that stable coins are having now, you can see that it's going to continue to grow as we go into the future. But the interaction between the legacy, as I call the legacy central bank digital currency, and the stable coins and the coin networks, how those all work together, I think is going to have a big impact in how we exchange value in the future. As you see now within the crypto networks, when the market's becoming a bull market, they're buying it, the market's buying into the crypto markets, right? As it starts going down into a bear market, they dump everything in the stable coins until the market starts going up again. So you can see how that interaction happens now. As CBDC comes on board, I think it'll be interesting to see how that value can then move into the traditional and legacy environment.
Cool. So stablecoins can be sort of like a safe harbor, a safety net, if to positively impact somebody's the impact of instability on somebody's holdings. Jim, how would you answer that? How will stablecoins impact national economic systems?
Well, first, I agree with Mark that I think they will coexist. I think CBDCs, traditional payment systems, crypto and stablecoins will coexist. I think there's some complementary use cases, but some different use cases. I think I take the major point being, if they became systemically important, then they may have implications beyond just being, a type of payment or storage that coexists with others. And so, to the extent that monies are moved all by private sector solutions, be it stable coins, I'm calling them private sector in this particular instance, or CBDCs, that creates another dynamic. That would mean that the US dollar, for instance, and maybe even bank monies, bank liabilities are not being used within the payment system or for storage. I mean, that could have a significant impact on both the banking environment, the central bank, and the central bank's ability to do monetary policy. So that's one thing that people think about, is if all storage and movement of money was done via crypto and stable coins or private sector actors per se, that would have an impact on the banking system, and the central bank role itself. So that's on the extreme side.
Suleiman?
Sure. So I started the answer to my first question by pointing out that the digital economy has evolved and has taken shape. But the thing is that it has taken shape, but it's still running on a conventional legacy foundation, and that's a problem. So there's that digital economy dynamics that's happening, but the legacy monetary systems and economic systems are still in place, and that's the systemic problem that we all are facing globally. Back to your question, I just wanted to really to address that problem, Mike, before answering the question exactly. So the stable coins revolves around bringing agility, right, into the digital economy and the payment systems, and that's the value proposition. Okay, with minimal risk of devaluation being backed by fiat or any other means. Now, the inherent risks, and that's the effect on national economies. I still see that the inherent risks of stablecoins that are yet to be addressed with that has to do with the prudential concerns, being at three fronts: the stablecoin runs, or the payment system risk, or the risk of a concentration of economic power. Those have to be clearly addressed by each and every jurisdiction, regulator within a jurisdiction, before a stablecoin can go mainstream within that country. Definitely, the value proposition is positive with regards to what it brings into the payment systems in terms of agility, but that could not and should not happen at the price of raising the unnecessary risks on the current status quo.
Okay, great. Okay, so 3 minutes left. So last question. If I had to ask you guys for a short answer on this, and by the way, I see the questions that have come up from the audience. Some of them have already been answered. I think I'm just going to grab those questions and send them out to our speakers, and maybe you can just type an email back to me on some of any answers that you might have. So around the horn, real quick, Suleiman talked about the shift from cash to digital currency. Obviously, we're going to go through a period of running parallel, right? The cash, the fiat, and the digital currency. So, we have outdated monetary policies that don't apply to digital currencies. We need to come up with a new set of policies. It's not a simple task. Starting with Suleiman, what's one piece of advice if you knew that a regulator or policymaker was on this meetup, what would you say to them, Suleiman? Quickly, short.
So it's really regulatory agility that I'm trying to extend as an advice to each and every regulator that I get to meet. They need to be as agile as everybody else within the ecosystem, and that means that their ways of working may not necessarily serve the era. So regulatory agility can be achieved by becoming by leveraging emerging technologies themselves through the subtech and what it brings to the table for them to act better and faster to the growing needs and demands of the digital economy. So they also need to be relevant as a regulator, not only commercial and investment banks.
Amen. How about you, Jim? What would you say?
Yeah, so I think part of it's what we're doing today, which is trying to understand the technology, understand what's possible through our joint experimentation. And there's also work being done at the Board of Governors under something called Tech Lab, which is doing the same thing, understanding deeply the technology. The other is to work with other regulators because there's some overlap of responsibilities. We can't be doing it isolation. And the third, which is also what's going to happen soon, is talk to people in the public. We have a public consultation coming out of the Board of Governors fairly soon, imminent, I'd say. And I think it's important that we can't do this in a vacuum. I also quote Chair Powell that says, we can't do this ourselves. We have to do this in conjunction with Congress. We need the support of Congress because this is big, this is significant.
Right. And Congress, at least in the US, they react to the public. We are, after all, a republic, right?
Yes. Yeah.
Okay.
But we have to do it from an educated perspective.
That's right.
From just
cliches.
Leave it
right. That. Yes, exactly. Mark, what would you say to a regulator?
Yes. So the regulators need to ask themselves, what does it mean to be a regulator in this day and time, right? Ask what that means. What does that mean? What does that mean for us? I know all the central banks and regulators understand their business and their purview very well. But going back to Jim's point, you need to educate yourself on this new type of technology. Educate yourself on what's going on, what's happening. Don't do it in a vacuum. Like Jim said, we need to collaborate and talk, especially learn from the Boston Fed's doing and other central banks that are in this type of technology now and researching it and understanding it. Don't recreate the wheel. Collaborate, work together, and come up with common solutions.
Yep. And I would say that this team is doing a really good job of publishing information on their LinkedIn pages, publishing links, etc. Connect or follow these guys. Build a river of information that feeds your brain of good information coming from trustworthy and reliable sources, and then read that river of information on a disciplined basis. Well, great. Well, thanks, you guys. Really appreciate it. This is Mike Wise, head of partnerships with Boston Blockchain Association. And I've been speaking with Jim Cunha, EVP of the Boston Fed in Boston, Suleiman Barada, at the head of UAB Digital, Union of Arab Banks in Beirut, and Mark Montoya, Chief Data Officer of the GBA, Senior Analyst with a U.S. financial regulator. You can find all of us on LinkedIn. Thank you so much for the questions. We'll be publishing them and answers to them hopefully soon, and some of the other links that we've talked about today. That concludes our vidcast for the future of money, governance, and the law. Join us on January 22nd for that event, either in person or virtually. Thanks, everybody.
Thank you, Mike.